Hello everyone, my name is Gregor Horvat and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, dollar Swiss, crude oil, dollar Mexican peso, and the S&P 500. So the euro dollar is coming to the downside. We are seeing still quite slow price action lower if we consider that stocks have seen a very sharp sell-off since start of the week. As you know, there is plenty of risk on the table. You have the Russia-US tensions around Ukraine, and then you have this Fed's hawkish policy. Today we have the FOMC press conference, and if they will stick with the hawkish view, then we may finally see acceleration to the downside on the euro dollar, and dollar could actually be strong across the board. However, we have to keep in mind that stocks have seen a sharp drop since start of the year, and actually they may be very careful on the press conference, and maybe they will try to defend the stock market, because obviously they are watching stock market, and if they will sound too aggressive, this could accelerate weakness on stocks. So this is something that we have to keep in mind. But from central banks' perspective, especially divergences between central banks, we still think that this ECB will stick with current policy. They are not so aggressively hawkish like Fed, so this is what can keep euro dollar in downtrend. Now, looking at the daily chart here, still I'm expecting more weakness into a fifth wave. We were talking about this recently, and I'm looking for wave C to retest the 61.8%. Notice that rise from recent lows was clearly made here by three waves. Okay, so this was a quite complex correction, not very sharp, simple zigzag, because you had this wave B. This is very tricky. It unfolded as a triangle. So despite sharp move to the upside, we were looking for limited upside at the upper trend line resistance. It's the power line of the lower side of this channel. So since market reversed very nicely to the downside, clearly with impulsive price action, we are currently already trying to break this wave B, swing low, and this appears to be an important indication that bears are taking over the moves, and that we are actually headed much lower here. Okay, of course there can be some rallies coming, and if that would be the case, watch out this broken trend line. It could react as a resistance. Also, you have this 113.70 as important resistance level if we really are going to see a recovery. Now let's take a look also on dollar Swiss. Now dollar Swiss is actually tricky. It's trapped in a sideways consolidation. I'm looking this to be triangle in a wave B, so at some point I'm looking for more weakness. Maybe this will occur after euro dollar may try to stabilize after this fifth wave to the downside, or maybe even earlier if we consider that in risk off sentiment, Swiss franc could also be very interesting as a maybe even acting as a safe haven, especially against other currencies, not only the US dollar. So overall, I think that there can be still limited upside. Looking here for a triangle in a wave B, so watch out for more weakness after this triangle is going to be complete. Now on the 4-hour chart, what I'm looking at is currently tracking these three subwaves for a wave C close to this upper trend line resistance. So watch out for potential limited upside. Okay, but even if dollar is going to stay bullish across the board, it doesn't mean the dollar Swiss will easily break to the upside. I still think that, because as said earlier, Swiss franc can act as a safe haven in risk off moves. I think that we should be aware of potential limited upside here, but still wave C that belongs to this ongoing triangle. So I think that this market will remain trapped in the range for a while. And now let's take a look also on crude oil. Now crude oil is coming to the upside. We are seeing very nice moves higher. I'm still tracking and observing two wave counts. The first shows potential flat correction in progress. You are now then in a wave B that should find or stop at this $90 per barrel, very important psychological level. Also, this $90 per barrel should be important even if you track the second wave count, where I labeled wave 4 as a flat and you are now in a wave 5. So I think the upside here could be limited, but not just yet. We have to see what will be the outcome in the next few days, few weeks from this Russia-US tensions, and this is obviously what this fear is obviously what is driving the crude oil currently higher. Also, demand is still here because this new COVID variant actually is here, but governments didn't came out with any new restrictions, so demand is still here. You have US-Russia tensions, and that's why we are keep seeing higher crude oil prices. And also looking at the 4-hour chart, it looks like that there can be a little bit more upside here to complete this extension, an impulse away from $66. Okay, so I'm looking for a 5-wave movement. Actually, we've been talking about this 4th wave consolidation, this 4th wave pullback. It stopped at this upper trend line resistance of this that becomes support of this base channel. Also, there was a 38.2%, so it was the perfect area for a new bounce, and currently we are already seeing a broken channel, which is just another confirmation that crude oil is likely going to stay strong. At the same time, of course, Canadian dollar could see more strength. We are currently seeing it moving to the upside. You have the Bank of Canada also rate decision later. They could sound hawkish because as you know, inflation is still high, so at some point maybe they will try to follow the Fed. Also, Mexican peso could see more upside and is looking strong when crude oil is in uptrend. So I will take a look on dollar Mexican peso here. Now we were seeing a very nice strong reversal last year. I think that this resistance will now stay in play around 22.0 level, and notice that this drop was quite impulsive. Okay, I can count 5 waves down here on the 4-hour time frame, and we recently came out of this downward channel, so I think that this 5-wave drop is now finished and that you are now potentially here making this corrective rally for a wave 2. Now, always when I'm tracking wave 2 or I should say a higher degree correction against the previous 5-wave cycle, which was this drop from 22, well, I want to see a retracement. If this is the higher degree correction, I want to see a retracement at least towards 38.2%. So that's the area where I would pay attention for a potential limited upside if we really are going to see this level retested. Okay, so after this rally, I think that the dollar Mexican peso could see much more weakness, but I think that this is not going to happen right now because you still have this dollar that it's pointing currently to the upside, especially in this risk of sentiment. But if stocks would stabilize, I think that dollar Mexican peso will see more weakness. Also, since I mentioned stocks, let's take a look on the S&P 500. Now here I'm looking still at the 2-wave counts, and we've been talking about this potential limited upside at the end of last year, either as a wave 4 that is in final stages with this wave C impulsive flag that can belong to expanded flat correction, or maybe this current drop is just part of a higher degree correction that will take us even back towards 4,000 if we consider that market is coming sharply down out of an ending diagonal. So this wedge is something that is very important, very sharp. It usually causes very sharp reversals in trends, and this is what is happening right now. So we have to be aware more potential weakness. Even if this is just going to be a limited weakness here, keep in mind that if that's wave C, it still should be made by 3 waves. So I think that watching price action very closely will be important today. What will happen after FOMC press conference? Currently we are rising, but only with minor 3 waves here away from the lows. So very important resistance is going to be around 4,500. So that's key resistance for current bull run. If we will fail to break above that resistance level, but rather finish the day lower, I think that more weakness should be coming by the end of the week. If we'll see sharp move above that resistance and maybe even make an overlap with 45.80, then I think that this market will either turn back to the bullish mode or stay sideways here for something more complex before more strength. Okay, so for now, for bears, 4500 very important level. It should hold, move above 45.80. I think that we will have at least temporary low here in place. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you soon. Bye.